And we are live. Good evening, everyone. Tonight we will be discussing how the Fed just announced another $2.3 trillion in stimulus and lending to support the economy. Gold just hit a 7.5 year high as a reaction to the Fed printing more money. As I've accurately been predicting on this channel, the only way that the economy can grow is that the Fed is going to have to print more money. It's not complicated. Money is debt. And I said that it's going to take another $10 trillion on top of the $6.2 trillion that the Fed injected into the economy and that the stimulus and the CARES package provided to the economy. And as you can see, we're what? This is 2.3, so we need another 7.7 in order to get the economy up and running. So as you come into the live stream, type 1 if you can hear me clearly. I know I had an audio issue before. Please like the video, share the video, subscribe. Make sure that you hit the notification bell. Make sure that you join my mailing list so that you can be notified whenever I am live or uploading a video. And if you want to follow me on Instagram so that you can contact me, a link to my Instagram is in the description as well. And if you want to support the content financially, a link to my PayPal is in the description as well. So let's get right to it. As you can see, everyone is saying my audio is good. Perfect. So it says gold prices soar to a 7.5 year high as the Fed drops an atomic bomb. Gold prices are trading sharply up at a 7.5 year high near $1,750 in midday U.S. futures trading Wednesday on safe haven demand amid a global economy that has lurched into recession and possibly into depression. More scary U.S. economic data out today, as well as a mammoth Federal Reserve stimulus package announced as helping to boost the precious metal prices. June gold futures rose, gold futures were last at $61.30 an ounce at $1,745.90. And the other part right here says the latest U.S. weekly jobless claims report showed a rise of 6.6 million, which is above expectations for a rise of 5 million and follows last week's rise of over 6 million and a rise of over 3 million the week before that. Guys, I've been telling you this, and I'm not saying this because I claim to be an economist or I claim to have some PhD in finance. It's just history doesn't repeat itself, but it rhymes. We've seen this play out and we've seen this happen in 2008. The only way the economy can grow is by getting Americans to go into debt. And if you don't go into debt, then the government's going to go into debt for you, and they're going to tax you twice through your regular taxes and through inflation. That's the only way the economy can grow. And we're watching this happen right now, just as it unfolded in 2008. I said to you, it's going to take another $10 trillion on top of the 6.2. We just got the 2.3. So we're going to need another 7.7, which is why I said to you right now, me personally, and this isn't financial advice. I'm just telling you how I view the market. I like to make sure that I'm hedging myself and I'm protected. And I just see that there's too many risks in the future right now for me to be putting capital to work. So if I was looking to invest in this market as far as a trade is concerned, then there's more room to the downside and there's more money to make shorting this market than getting long this market. But again, the Fed is the wild card because no one expected them to print this $2.3 trillion. Literally $2.3 trillion out of thin air, just like that. So when you're investing, if you're someone that's shorting this market, you need to keep that in mind because the Fed is a wild card. And remember, this is just one country that's just printed 6.2 plus 2.3, that's $8.5 trillion. 8.5. What about European countries? What about the ECB? What about the Bank of Japan? What about Australia? See, when you start putting the pieces of the puzzle together, you can see we're talking about 2 trillion here, a trillion there, a trillion there. This is going to cause inflation. It just is. So let's look at the markets overall and see what's going on. It says the S&P was up 46 points today. The Dow was up 285 points. The DAX was up 231. And the FTSE was up 164 points. The Nikkei was up 70. And the Hang Seng was up 330 points. Now, understand, Wall Street is addicted to cheap money. That's it. These companies aren't earning money. They aren't profitable. They're literally going up because of financial engineering, where we live in this perverted economy where good news is bad news and bad news is good news. So when the unemployment numbers came out and we seen that 6 million people filed for unemployment insurance, the stock market was up 1,100 points. Why? Because everyone was predicting that, well, the worse the economy gets, the more the Fed and the government's going to intervene. Like, I really want you to understand that. Like, the economy, the stock market didn't go up because of like companies' earnings were better. The stock market rose based upon the assumption that because things are so bad that we're going to get more stimulus. And this creates moral hazard, because if you are a business that's been doing the right thing and actually saving money and budgeting, and you have money for a rainy day, and you didn't over leverage, you don't get bailed out. You don't get rewarded. But if you take on a lot of debt, if you do things the wrong way, if you ship jobs overseas and automate jobs and operate on razor thin margins, you get a bailout. So it incentivizes companies to not do the prudent things. As we can see here, this is the S&P right now. We're looking at a weekly chart. Remember, markets don't go straight down. They just don't. You go down, the shorts start to cover, lock in some profit. And the way that shorting works, you have to actually buy back the stock when you give it back to the brokerage or wherever you borrowed it from. So this creates this sort of retracement. But I'm still looking at more room to the downside. Remember, I said, if I was trading this market, remember, this is a trade. This isn't an investment. If I was trading this market, 27, 28, 2,900, I'm looking to get short. I don't see some V-shaped bounce just happening. I just don't. And for those of you who like to play in the options market, Nassim Taleb advised University Tail Fund returned 3,600% in March, playing in the options market. And if I was looking to trade this market, I would definitely be looking to play in the options market. It says a tail risk hedge fund advised by Nassim Taleb, author of The Black Swan, which is a really, really good book. I encourage you guys to go out here and read The Black Swan, because it talks about risk that people can't predict. But one thing about this is sort of like a white swan, because people sort of knew what was coming. They just didn't take it that serious. It says it returned 3,612% in March, paying off massively for clients who invested in it as protection against a plunge in stock prices. The fund, managed by University Investments of Miami, had a year-to-date return of 4,144%. And this is because they play in the options market heavy. So a lot of you, again, I'm just planting a seed in your mind. Obviously, these people are professionals. They've been doing this for a long time. It's going to take a while. You can make more money when the market goes down than when the market goes up. See, a lot of people, they have a long-only bias where they only want to be buying the market. You can make way more money when the market goes down. And a lot of these options, especially the put options that are deep out of the money, these are penny options. And this is where they play at. And I'll put this in the chat for those of you who want to go and, read this in the future. Let's look at gold, as we can see right here. Look at gold. $1,752. And this is a weekly chart. I laugh at people. I told you my channel's beginning to grow. And I get a lot of trolls who come on here and they say, gold is going down. Go back and watch my videos that I was doing back in March. And they were telling me, gold is going down. Look, everything is going down. And I was telling them that if you look at gold compared to the rest of the market, it's not really going down that much. And also, this was forced liquidation. This was margin calls where people had to raise collateral. They were forced out of the market. As I told you, a lot of these hedge funds, they put on hedges where they may have 5% of their fund allocated towards gold, and then they may have the rest in stocks and bonds. Well, if gold is up, meaning they've made money in gold, let's say they're up 10, 15, 20% in gold, but they're down in the stock portfolio 30%, they have to sell what's making them money to raise the collateral in order to be able to hold their positions. So this was just forced liquidation. This was margin selling. And look, it came right down and poof, it popped back up. And what did I tell you was going to happen? More money printing. Why does the Fed have to print money? Because everyone's pension, 401k, their retirement, everything that most people have is built into the stock market. Right? So they have to prop up the stock market. There's no way they're going to let the stock market go bust. And this is why I was trying to tell you, if you see this is the opportunity of, one, you take a lot of risk out of your portfolio by owning gold. Because if the stock market falls, gold's going to fall less on a percentage base. You take a lot of volatility out of your portfolio by owning gold. Now, let's look at Bitcoin. Bitcoin's at $7,315. And remember here, see, I'm not a person who I come on here and I just talk about things to talk, right? And I talk about my PhD. And no, I 3 weeks ago, when gold was selling off, when Bitcoin was selling off, I put this in the community tab. And I says, while everyone was panicking and selling, I was busy buying more and putting money to work. You do realize that Bitcoin and gold are exactly the same as they were a week ago. Nothing has changed, but companies behind stocks that have crashed are not the same. Earnings will definitely go down. Liabilities will go up. The Fed and the government will print trillions of dollars to bail out failing companies. We've seen this picture in 2008. We know exactly how this will end. Print, print, print money out of thin air. That was 3 weeks ago. That was 3 weeks ago when I put that out there. And look what happened. Gold's at a 7-year high. Bitcoin went from 3,800 down here when everyone was saying it's over, popped up to 7,300. See, when you've been doing this as long as I've been doing this before, you've seen this playbook happen so much. And there's 137 of you watching this. Hit the like button. You know, and I try to. I don't like to sound cocky or arrogant. I just try to give you information so you can understand that you need to be careful with who you're listening to and their ability to actually deliver on the things that they're telling you about. See, anyone can get up here and sound smart if they watch a video and try to regurgitate some information to you. But if you haven't actually been doing this, you can tell the difference between a person who's pretending versus the person who's doing. You can tell the difference. There's a huge difference. And right on cue, Trump says bailout proposal for airlines may come by the weekend. I've been telling you that this was going to happen a month and a half ago. I keep telling you, get your hands on the book, The Creature from Jekyll Island. Why do I keep telling you this? Because if you get that book, you'll see 2008 wasn't the first time we bailed out banks. It wasn't the first time we bailed out companies. It wasn't the first time we bailed out the auto industry. And it wasn't the first time we bailed out a state. We bailed out New York City. Back in I believe it was 72 or 78. You know, it says, President Donald Trump said he may unveil a bailout proposal for beleaguered U.S. airline industry by the weekend. The president said Thursday at a White House briefing that he met with Treasury Secretary Steve Mnuchin and Transportation Secretary Elaine Chao to work on details of the proposal. Airlines have been frustrated by delays in the U.S. aid after being virtually shut down. So, now this is an airline industry that brought back their stock, didn't want to pay their employees fair wages, reduced their airlines, made the planes extremely small, and they're going to get a bailout. And this creates what I've been telling you guys time and time again. Time and time again. It creates moral hazard. It creates moral hazard. And then you see people saying, oh, the S&P 500 caps best week since 1974 after the Fed acts. So I tell you, this is not capitalism. These companies aren't competing. This isn't competition. This is cronyism. And this is right here, gold reached a 7-year high as demand for the haven rose. It says the S&P 500 index rallied for a third time in 4 days, bringing this week's increase to 12%. The Fed announced another series of sweeping steps to provide as much as $2.3 trillion in additional aid, just as data show the number of claims for unemployment benefits surged for a third week. Now think about this. As I've been telling you guys time and time again, you have supply disruption and you have demand disruption. So you're essentially saying, don't lay off people. I'm going to give you money. Just think about how backwards that is. You're going to pay, you're basically bribing businesses not to lay people off, throwing money at them when there's no demand for their business. So now businesses are going to basically take on debt, take out these loans that may or may not be forgivable, because we see the SBA's dropping the ball, just to keep employees on the books, although you may not have any customers to sell your products and services to. Like, if you can't see how unsustainable this is and just how backwards this is as an economic policy, then I don't really, know what to tell you. Like, this is foolish. The next article right here, it says the Fed now to go out and buy junk bonds and lend to states and fresh virus support. What did I say to you was going to happen next? I told you. They're going to start buying stocks. The Fed is basically going to buy everything because there's no demand in the stock market. There's no demand. When you see, like, let's look at the S&P again. Like, when you see this goes back to my point. When you see this move that happened right here, this was all spurred from the repo market and stock buybacks. This was all artificial demand when the market was rising. This wasn't because these corporations were earning money and mom and pop investors like you and I were buying stocks. This was all the Fed funneling money through the repo market, that money going through the repo market and from going to the banks, and then the banks lending that money to hedge funds and investment funds to go speculate. So, okay, yeah, the market goes up, but then when the market falls, there's no one buying this market. Because it's all artificial. It's not real demand. Markets move with supply and demand. There's no demand coming from mom and pop investors. It's coming from the Fed basically pumping liquidity, aka printing money out of thin air and putting it into the banking system, is what you're seeing happen. And here we go. Now they're saying they're going to buy junk bonds. So they're going to buy corporate debt. They're going to buy bonds from municipalities. And they're going to basically help backstop the government through different lending programs. The more money you print, that's going to cause inflation. So when you see gold hitting this high, you haven't seen nothing yet. Now start looking at some of the gold stocks like Newmont Mining. Right? I want you to start thinking about that. So let's read this article a little bit. It says, as fresh evidence of the economic toll from the virus floods in, the Federal Reserve unleashed another round of emergency measures, including a pledge to provide support to risky corners of financial markets that have been some of the hardest hit. Just as the Fed unveiled the measures, a new report from the Labor Department, I already told you about this, it says bringing the number to 16.8 million in the past 3 weeks. This basically is 16.8 million Americans who are filing for unemployment benefits. 16.8 million. Now think about this. If you go back and you look at the Great Recession, I think we totaled out about like 32, almost 33 million people throughout the entire year and a half of the Great Recession. We're already at half that in a matter of what, 2 to 3 weeks? I told you, we're going into a Great Depression. The bubble popped. The difference is that this is going to look different than the Great Depression of the 30s. It's going to be dislocation because the Fed's going to print money. So you may get into a situation where the stock market may be rising, but inflation is rising just as fast, if not faster. We went through the roaring 20s. Everything was booming. And then the 30s came. And then now we just went through our generation's roaring 20s. And I told you guys, history doesn't repeat itself, but it damn sure rhymes. Junk debt. And see, this creates moral hazard because look what happens now. Now that everyone knows, you're basically taking price discovery out of the market. So what is Tesla really worth? What is Apple really worth? What is the debt that these companies are selling into the marketplace worth? Because if you know that the Fed's going to backstop everything and buy everything, well, then it becomes really, really hard for you to figure out what an asset is worth. There's no price discovery. See, the marketplace is supposed to determine what something is worth. You and I speculating on an asset is going to determine whether it's overvalued and undervalued. Well, if you know you can't lose money because the Fed is not going to let the market go down, well, then it creates a bubble now because now people become more risky because people are saying it can't go down. And this is happening now with junk debt. It's called junk debt for a reason. Investors quickly bid up prices on corporate bonds and stocks after the announcement. High yield debt was among the biggest gainers, with some of the largest ETFs tracking those bonds surging the most in a decade. You know why the ETFs are going up? Because the Fed is buying that debt. That's why you see those ETFs going up. But the nature of the Fed's actions past the traditional boundaries of the central bank to purchase lower rated debt and credit of municipalities, raising questions about their future role. Moral hazard. What do you always hear me talk about? Moral hazard. It 100% creates moral hazard. Because you're rewarding companies for failing. And then now think about this. You and I, we don't get access to this type of support. If our business fails, we have to go file bankruptcy. It's over. Well, if you're an airline company and you're a CEO, you basically say, listen, if you don't give me the bailout, I have to lay people off. So you hold them hostage. You make millions of dollars on the way up. Sell your stock at the top, pay yourself record high bonuses, and then you get a bailout for mismanaging the company, for doing everything wrong. And now I want to play Ben Bernanke because this is important because I keep trying to tell you guys that this money is created out of thin air. It doesn't exist until they print it. Now, this is back in 2008. And they were talking about when they start doing quantitative easing. And they said, oh, once the economy gets good, we're going to unwind these assets. And I've shown you guys this before, but there's new people that come in that may not know this. Well, here we are in 2020, and the Fed never unwound its balance sheet. Instead, the balance sheet has grown bigger, and it's going to keep getting bigger because money is debt. The economy can only grow by getting people to go into debt. And once you understand that, then you begin to see where this is going to go and how this is going to end. So let's play this real quick. Hold on.
Balance sheet. Is that tax money that the Fed is spending?
It's not tax money.
The banks have accounts with the Fed, much the same way that you have an account in a commercial bank. So to lend to a bank, we simply use the computer to mark up the size of the account that they have with the Fed. So it's much more akin, although not exactly the same, but it's much more akin to printing money than it is to borrowing.
You've been printing money.
Well, effectively, and we need to do that because our economy is very weak and inflation is very low. When the economy begins to recover, that'll be the time that we need to unwind those programs, raise interest rates, reduce the money supply, and make sure that we have a recovery that does not involve inflation.
He's not kidding about printing money. The Fed issues U.S. currency. That's why it says Federal Reserve Note on all the bills in your wallet. This is the Bureau of Engraving and Printing, just a few blocks from Bernanke's office. The Fed's mandate from Congress is to put enough money in the system for maximum employment, but not so much that it sets off inflation. The Fed actually pays for itself and returns billions in profits to the Treasury.
So, as I've been telling you guys, I don't guess. I don't make this up. This is from the federalreserve.gov's website. And I see someone in here, the buybacks didn't cause a downturn. Yes, it did. Because you're over leveraged. You're gorging on debt. So now when something happens, the economy was fake and phony to begin with. It was all manipulation. It wasn't because the economy was great and thriving. Rising stock prices doesn't mean that the stock market isn't an indicator that the economy is doing well. Markets operate off of supply and demand. Well, if you buy back your own stock, it's easy to push prices up because you're artificially buying back your own stock. That's not investors buying those stocks. Those are companies buying their stocks. That's the problem. That's not healthy. That's artificial. Markets are supposed to operate off of price discovery, meaning that your company is profitable because they're selling more goods and services, not because the Fed has interest rates low and they're doing a circle jerk where they're printing money out of thin air, funneling through the repo market so you can buy back your stock and pay bonuses. Because it's easy to push the prices up because there's less supply, because you're buying back the supply. The economy was in a bubble. It's been in a bubble. And you can look at the Fed's balance sheet. You go back to 2008, during the Great Recession, when they first started quantitative easing. What is quantitative easing? Quantitative easing is the Fed printing money out of thin air, going into the marketplace and buying up treasuries and injecting liquidity. That means giving banks money. What do banks do with money? They don't loan it out to you and I. They loan it out to their friends on Wall Street to go speculate in the stock market. That's artificially pumping up asset prices. And you can see it right here. They never unwind their balance sheet. It goes from $2 trillion in 2008. It goes up to $3 trillion in 2013. It goes up to $4 trillion in 2014. And soon as they started to try to sell it, the stock market started crashing. And here we are now at almost $6 trillion. We're at $5.8 trillion on the Fed's balance sheet. $5.8 trillion. And they just announced another $2.3 trillion here. There's another $6 trillion over there. Right? If the economy was doing so well, they wouldn't need to pump trillions of dollars into the economy artificially if it was doing well. Prior to the pandemic, they had a repo crisis in September. The Fed was pumping $100 billion every day into the banking system in September and October before the pandemic because the economy is fake and Trump is fake. And anyone who supports that mantra that thinks printing money out of thin air is somehow great is foolishness. Yes, yes, Manic Tiger. The 2.3 trillion today, Let's go. I'll read it for you right here. It says the Federal Reserve Thursday morning announced another $2.3 trillion in stimulus and lending plan to support the U.S. This is on top of the $6 trillion that they just did last week. And that doesn't count. I bring this article up all the time because they're still going into the repo market. There's another $4.5 trillion that's just for the repo market. Give me 1 second. Let me pull this up for you. Right? See, people, when you understand what's going on, you understand that the economy is a house of cards. Right? It says the Fed has pumped $9 trillion into Wall Street over the past 6 months. Since September 17th, 2019, 6 months ago, the Federal Reserve has loaned billions of dollars to Wall Street every single day the stock market has been open. This is the first time that this has been necessary since the financial crisis of 2008. That fact in itself makes this very much on par with the financial crisis of 2008. If the economy was doing well and the stock market was doing well, why did they have to pump $9 trillion into the stock market? Right? Why you don't print $9 trillion if the stock market is doing well? And I mean, because I know some of you are going to say, oh, we need to see the receipts, right? So let's go to the Federal Reserve, the Fed of New York, right? Fed of New York. Let's go here, Fed of New York. Pull this up. So, in the future, when you want to go look this up for yourself, you go here to data, right? This is the NewYorkFed.org. Go here to markets and policy implementation. You go to data, and you can go and look at the reverse repo operations and the repo operations. And you can do a historical search. And you can actually go pull it up. And you can pick a date. I mean, we can go verify this on our own. We can go back to... I don't want to go back that far. Let's go to September. Right here. We go September 17. And we can pick today. We can go find. And you can see how much money they've been actually pumping into the repo market on a daily basis. Right? 83 billion here. Right? These are $1 billion. You got 83 billion here, 13 billion here. You have 144 billion there. Another 148 billion here. This is on a day, right? This is every day. $182 billion a day. And I mean, you can download the Excel spreadsheet and you can go look this up and you can go cross-reference this and prove this on your own. Right? And I'll copy and paste this for you because I believe in you going to go and do your own research rather than listen to me. Right? I just provide you with the facts. A healthy economy, if the economy's healthy, you should not have to inject money into the economy. Okay. Now this person is just a fool. Like, at a certain point, see, and that's the thing with me, guys. Like, I'll give a person a chance to let them speak. But if a person's just speaking and they're not listening and it makes no sense. Like, the whole idea of quantitative easing is injecting liquidity into the system. That means printing money. You don't have to be intelligent to do that. Well, you said you got an error from the link here. You got to use this link then, and you got to actually go search the dates for yourself. Try this again, Manic Tiger. It should work now. Click on the link now and tell me if it works. So one thing about me, I give people a chance because everyone doesn't know this stuff. So I want to give you a chance to actually go and research stuff on your own. The Federal Reserve is not a part of the government. They are a private institution with shareholders. This is not a conspiracy theory. This is the fact. As I told you guys before, if you have a private bank giving you money and they charge you interest on that money, even if you pay them back the principal, you can never pay them back the interest, which means you are forever in debt to a private institution. So the whole Federal Reserve System from its inception was a scam. Was 100% a scam. So now we know that the Federal Reserve is a scam. We have the former Fed chairman telling you that they print money. I just played a video for you. They're telling you they're printing money. So we got that now. Whenever the Fed operates in the market, they're creating money out of thin air. Now, the problem with that is that there's nothing wrong with inflation if wages are growing with inflation. There's nothing wrong with inflation if companies are doing the right thing and they're reinvesting in their employees and they're reinvesting back in their company. But they're not reinvesting back in your company. They're not paying you a fair wage. Instead, what they're doing, they're buying back their stock. Who does buying back stocks benefit? It doesn't benefit you, the employee, who may have 100 shares or 200 shares. It benefits the elite. It benefits the CEOs. It benefits the executives. That's what happens. Now, Mr. Supreme Cinema, thank you for the donation. Says the Fed prints currency out of thin air, but people are critical of Bitcoin. Bitcoin is backed by proof of work, what the dollar is also backed by. Again, rhetorical question. Exactly. And we're going to get to Bitcoin in a second. But, at a certain point, as I said before, I made this post 3 weeks ago, and I don't say this because I want to brag. I'll read it again for you because I've seen this picture play out time and time again. You can't pay it off. I didn't misspeak. I'll show you. You can't pay it off. If you're a country, you're a sovereign nation, and you're borrowing money from a private bank, and they're charging you interest on the money, it's not complicated. It's not hard. Just think for a second. If you pay them back the principal, how can you pay them the interest when they print your money? You can never pay them back if they're printing your currency because all of the currency that exists, they gave you. So you can never pay back the interest on the money because all of the money that's in circulation is the principal. So the only way that you can pay off the interest is you have to borrow more money to pay the interest, which keeps you in a cycle of perpetual debt. You can never pay off the debt. America can never get out of debt from the central bank because the central bank prints their money and charges them interest on the money. It's impossible to pay them back. Right? Think about it. If I give you $100, you're a country, I give you $100, and I say on that $100, you have to pay me 3% interest. Once you pay me back the $100, where do you get the 3% from? Right? Think about it, right? 3% on that $100 is $3. Well, you gave me back all of the money in circulation. So there's no way you can give me back the 3% unless you come back to me and have to borrow it again, which keeps you in the cycle of constantly being in debt. Right? You shouldn't be borrowing. A country shouldn't have to borrow money from a private institution. Like Elise said, they should have their own their own currency, like your country. You shouldn't have to be borrowing money from a private bank. Exactly, Mr. Cinema. Once you pay back the $100, there's no more money in circulation, so you can't pay off the interest. It was a scam from the beginning, right? So now, again, I want to read this to you because new people come in at different times. I wrote this 3 weeks ago. I said while everyone was panicking and selling, I was busy buying more and putting money to work. You do realize that Bitcoin and gold are exactly the same they were a week ago. Nothing has changed, but companies behind stocks that have crashed are not the same. Earnings will definitely go down. Liabilities will go up. The Fed and the government will print trillions of dollars to bail out failing companies. We've seen this picture in 2008, and we know exactly how this is going to end. They're going to have to print more money over and over again. There's nothing different. And now the money supply has updated M2. That's the money supply. And you could go and look this stuff up on your own. This is from the government's website. I use their own information. I don't make stuff up. This is from the Federal Reserve Bank of St. Louis. If you look at all of the total debt, loans and liabilities, there's $74 trillion. And there's only $16 trillion of money in circulation. And this is counting, CDs and other liquid assets. If you go with M1, it's lower. But I pick M2 to give you a bigger picture. So there's more debt in the system than physical cash. $74 trillion worth of debt. And there's only $16 trillion worth of cash or assets that could be converted into cash. Why? Because money is debt. The economy cannot grow unless you put people into debt. And once you understand that, you can understand why this keeps happening. This was bound to happen because companies, they over leverage themselves because they get rewarded by mismanaging the company. The more debt you go into, the more you borrow, the more you mismanage your company, the more likely you are to get bailed out. And if you do the right thing, you're more likely to go bankrupt if you get into trouble. If you do the right thing and you don't over leverage and you don't over consume and you pay your employees fair wages, you don't get a bailout. But if you are American Airlines and you buy back your stock and you lay people off and you don't let employees negotiate for fair wages, you get a bailout. This has been going on over and over again, and it will keep going on over and over again. Which is why you see gold. Because people want an alternative to the dollar. Not just people like you and I, but countries. I told you, China's buying 50 tons here of gold, 40 tons here. Russia's buying 20 tons here, 30 tons here. It's not just little mom and pop. If gold was useless and it didn't have any monetary value, why would Russia buy it? Why would China be buying it? Why would your central bank be buying it? Because fiat currencies are backed by debt. And we know inflation is around 3% based upon CPI data, but we know it's higher than that, which is why people want alternative forms of money. People always want alternative forms of money. And that now gets us to Bitcoin, because we're coming up on the halving. We're 33 days away. You can't, Chris Perry, I'm going to try to give you the benefit of the doubt. You're overcomplicating this. There's nothing to overcomplicate. If there's only $100 in circulation, this is not complicated math. I give you the $100. I say you have to pay me back the $100 plus 3%. You come back and you give me the $100. You come back and give me the $100. Where do you get the 3% from? That is reality. It's one country. Every country has a central bank. This is not complicated. It's a shell game. It's not complicated at all. It's not complicated. But I get it. You know, I try to give people the benefit of the doubt. But as I told you guys, I'm starting to get more and more trolls. So I'm going to get them out because they basically, I do that because I want y'all to see that it's extremely hard to have a conversation with a lot of people because they can't wrap their mind around very, very, simple concepts. Like, this is not complicated stuff. I mean, you have the Federal Reserve chairman telling you they print money. They're telling you they print money. Not complicated. They're literally telling you they print money. So if you're not going to take their own words for it, then I don't really know what to tell you, which is why I block you. But now the Bitcoin halving is coming up. And for those of you who don't know what it is, I'll read it to you real quick. As part of Bitcoin's issuance, miners are rewarded a certain amount of Bitcoin whenever a block is produced, approximately every 10 minutes. When Bitcoin first started, 50 Bitcoin per block were given as a reward to miners. After every 210,000 blocks are mined, approximately every 4 years, the block reward is cut in half, basically, and will keep on halving until the block reward per block becomes zero. And this is why I try to tell you, people keep saying to me, what is Bitcoin's intrinsic value? Bitcoin's intrinsic value is its hard money. That's what Bitcoin's intrinsic value is. It's sound money. You know exactly how much exists. It's deflationary. It's hard to confiscate, and you can't duplicate more of it. And once we get to year 2140, no new Bitcoin will ever be issued ever again. There's a hard fixed cap. So it's hard money. That's what Bitcoin's intrinsic value is. It's deflationary, not inflationary. You can't print more of it. After 2140, there will be no new Bitcoin created. That's the difference. So in 33 days, right, every block, there's 12.5 Bitcoin in every new block. It's called the Coinbase transaction. That's the first transaction in every new block. Well, that's going to get cut in half. That's why it's called the halving. So this is really important that you understand what sound money is. Sound money is money where I know how much is going to be in existence. It's scarce, meaning that you have to give up something in order to get it. When Ben Bernanke says that they're going to run money off the printing press, you don't have to literally, this is digital now. Like he said, they literally just type up what they want to give to this bank or that bank and poof, it comes into existence. That's a big difference. Like I tell you guys this all the time, if I'm getting paid in something, I want to get paid in something that actually maintains its value. I don't want to get paid in something that loses value every year. Why do you think about it, right? Why do you think that there's 3% inflation every year? Right? If we had sound money with fiat currencies, and you do know that every single fiat currency in the history of money has failed. Every single fiat currency in the history of money has failed. Gold has been money for thousands of years and will always be money. Why? Because it's highly durable. You can have gold sitting in a ship, and that ship can wreck and crash at the bottom of the ocean and sit there for 200, 300, 400 years. And then someone can discover that ship 400 or 500 years later and that gold will still be the same gold. It doesn't rot, it doesn't erode, it doesn't spoil. That's why they call it hard money. Because it maintains its properties over time. And then you hear these crazy conspiracy theories when people talk and see Bitcoin is trying to mimic gold, but being digital gold. Because see, one of the hardest this is why gold always became problematic, is that it's easy to centralize it. And that's because you have to store it somewhere, right? No one's going to walk around with 50 bars of gold on them. So you have to trust that the goldsmith or the central bank isn't going to lend out more money on gold that they don't have. So that's why gold always had problems, because first you had to trust the goldsmiths, and they will always give out more money and more paper certificates than actual gold they had, which caused inflation. Right? So when you look at Bitcoin solves that problem. Because you don't have to trust a third party to hold your Bitcoin. You can hold your own Bitcoin. If you have your keys, you have your own bank. So it takes the whole trust element out. It takes the third party out of it. And then when you hear these crazy conspiracy theories about somehow that the NSA or the CIA is behind Bitcoin, or that like what first technology's ever been successful, Bitcoin isn't the first cryptocurrency. It's not the first cryptographic discovery. Because you had Adam Beck with Hashcash. You had Nick Szabo with BitGold. You had David Traum with eCash. Right? We're talking about going back into the 70s and 80s and 90s. Cryptography has been around for a very long time. The whole idea of a cypherpunk is people who want to use cryptography and technology to give you a level of privacy. Remember, Bitcoin was birthed out of the 2008 financial crisis to mimic gold, to be a currency outside of the traditional financial system. And it's the same thing with gold. Why do you think people buy gold? Because people say, well, who's behind Bitcoin? Who's behind gold? Who backs gold? Who creates gold? Who's backing gold? No one, right? The marketplace determines what is money. The same way we removed church and state, we separated church and state, we're soon going to separate the state from money. We're soon going to separate the state from money, because look what the state is doing with money. They're abusing it. Think about how backwards that is. They printed up $6 trillion and only gave you $1,200. They printed up $6 trillion at first and only gave you $1,200. And that's one time. But now they go from $6 trillion for their friends, another $2.3 trillion now for their friends. And then now, I told you before, with the repo market, there's another $4.5 trillion that they're dedicating to that. So when you understand people are looking for an alternative, you understand why people want to own gold and silver and why people want to own Bitcoin. Because people want to own something that is going to maintain its value. They want to own something that's more stable, as far as, like, Bitcoin's going to be volatile because it's new. And like I told you guys, the market cap is low. But something like gold performs very well. If you go and look at gold during prior recessions, when the market's falling 30, 40, 50%, gold may be down 10%. So it takes a lot of that volatility out of your portfolio when you understand that. And I told you guys before, gold has been money for thousands of years. Now, you have to educate yourself on what you're putting your money into, but when I hear people say that, like I said, when I hear people say stupid stuff like, "Oh, you can't eat gold," who said that you're supposed to eat gold? You use gold to buy something to eat. You don't eat your gold. You use your gold to buy something to eat, right? You use your gold to convert it into fiat dollars so you can buy something to eat. Right? Like, like when you just hear this crazy stuff that people say, it really makes you just ask, some really, really just important questions. But El Cool J, that's the proposition of owning silver versus gold, because silver has monetary properties, but it also has industrial use. And most people are piling into gold and they're not piling into silver. So when silver finally gets its bid, it's going to go parabolic faster than gold because the market cap's lower and less people own it. You know the funny thing, D Flint? That's the funny thing, is that they say gold is God's money. So it's funny. It's funny you say that, because they say only God can make more of it. If you read any like historical texts, that's what they say. And remember, if you go back to biblical times, they say that Jesus kicked the money changers out of the temple, right? Well, who were the money changers? Go and do some research. So I try to give you guys information that can point you in the right direction, to can protect yourself. Obviously, like I said before, if you're poor, you don't have money, you have no business investing, right? I think gold IRAs are okay. I don't see anything wrong with it. If you have to, some of you may not want to own the physical, or however your retirement account may be structured. Um, you it may not be like, some retirement accounts don't let you allow you to own the physical, right? So you may have to own the paper. And listen, there's nothing wrong with owning the paper, because as I said to you before, you're going to get to a point where gold is overvalued. And my investment plan is all of the gold and crypto that I own. I eventually plan on, at a certain point, when all of the dumb money comes running in, and we get another blow off top like we did in 2017, and Bitcoin sitting somewhere at $150,000. I plan on getting out of my Bitcoin, selling my Ethereum, selling all my crypto, or at least half of it. And I want to get real estate, but I want to get big real estate, right? I want to get real estate like office buildings type real estate in like really, really prominent neighborhoods and areas is what I want to do. That's my plan. So, right, at a certain point, all assets become overvalued. Like, you can't hold something forever. Eventually, you have to cash out. And that's my investment plan, what I plan on doing. Mr. Supreme Cinema, that is a really, really good question. Who did receive their stimulus check yet? That's a really, really good question. I don't know. I haven't heard of anyone receiving their stimulus check. And then, what if you don't have your banking information registered with the IRS? I heard they were supposed to be creating a portal. I don't know if they made the portal yet for you to apply for those things. So, and I told you with the whole SBA loans, they're making that up as they go. And there's 185 of you watching. Hit the like button, guys, to help the content rank in the search engine. And for those of you who want to go and look up some of the people from that was working on the cryptography with Bitcoin, where did I put this thing at? Give me 1 second. Right here. You can go and this is a paper, right? These are white papers that really, really popular and famous cryptographers were working on back in the 80s and the 90s. So when I hear people say, oh, Bitcoin is new, like, cryptography's been around for a very long time. Very, very long time. A to Z Business and Opinion says the portal comes at the end of the month. Which is the problem. Think about that. You're locked down in your house. You lost your job. The IRS the unemployment website is crashing, so you can't really file for your unemployment insurance. You're out of work for a month. I think we've been on the whole quarantine thing now for about a month now, and they don't even have the portal up and running. So it just goes to show you, it's a joke to begin with. But I guarantee you, American Airlines, Delta, Boeing, they're not going to have any problems accessing their loans. They won't have a problem at all getting their money. They won't start handing out check until April 15th if you have direct deposit. If they have issues, if they have to issue out checks, it will take months. So there we go. So now what are you supposed to do now if you don't have a job? And what are you supposed to do? Of course, I've heard of Milton Friedman. Thomas Sowell, Murray Rothbard, Hayek. I've read all of the Austrian economists. That's where I get most of my philosophy from as far as individual. But as I told you guys before, most people enjoy being slaves, and it's hard to have a libertarian mindset or a hard money mindset when you have people who are not responsible. And what society do we want to live in? Do we want to live in a society where we're brutal and we punish everyone for every little mistake they make, but with the free market? Or do you want to create a society where there's safety measures in place for people who, for their own, vices, they may fall on hard times, they may, mismanage their money. So I believe that being a libertarian works on in a small economy. It may work in small segments of the economy, but when you're dealing with a broad economy, you're dealing with humans, most humans are irresponsible, right? And you have to have systems in place to bail people out because people are dumb. But then look what that leads to, right? It creates moral hazard because then now people begin to take advantage of those systems, right? Like when you create this welfare state, eventually people try to game the system, right? So it gets to the point where it's like the chicken or the egg argument. And eventually this is why all great societies and civilizations, they always fall apart, even going back to the Roman Empire, because people want more and more welfare. And the reality is the government can't give you more and more welfare. Eventually it falls apart. Eventually you lose control of the system because you start rewarding bad behavior to the point where we're bailing out companies that should be failing. Why? Because we don't want people to lose their jobs or we don't want the stock market to go down. So it creates moral hazard. So it's like I said before, it becomes a slippery slope, and it's a really good conversation to have. So the system's unstable, the system's falling apart, and we're watching it happen. Big King BJ, I believe that Boyce is, what's the word I'm looking for? He's very cunning and calculated. And I know he may sound dumb or play dumb, but it's all part of his game, right? Like he wants to play the role of the big cuddly teddy bear, your preacher, Uncle Phil. He knows how to reel you in. And he understands that many of us as a people, we like that preacher rhetoric. We like that pastor vibe. And he knows how to give us that. Like he just sits there and talks, right? Like he doesn't talk to you about like tangible things, like how to buy gold, why you should buy gold. Like if you ask him about Bitcoin, he couldn't tell you what Bitcoin was, how it works, right? So he jumps from opportunity to opportunity, but there's no real knowledge behind what he's saying to you. He's just really keeping you entertained. And what you'll notice about a lot of these people in that sector is they realize that a lot of black people like to just, look at entertainment all day, which is why you always constantly see them talking about celebrities and entertainers, because our whole culture, for the popular part of our culture, is really wrapped around entertainment. And this all ties back into, the Breakfast Club. Like, why is the Breakfast Club one of the most popular platforms for black people? Because it's centered around entertainment. And if you look at all of these individuals, well, what platform are they always on? All of these people who people view as schemers or scammers, they all went to the Breakfast Club, because it's all linked together, and it's all it's all tied together. And that's just the reality. Like I said, going back to when I was talking earlier about money, so many of us don't want to believe that the system's a fraud. This system is fraudulent. And when you start talking about things, of course, it's more complicated than the illustrations I write on the iPad. But I'm giving you the context is simple. It's money printing. They're going to try to they're going to try to overcomplicate it with all these different names and different mechanisms and mathematics behind it. But at the end of the day, it's money printing. It's a scam. When I was a kid, I can go into the store with $1 and I can buy a whole bunch of different things and items. Now I go into the store, I barely can get a Snicker bar for $1. That's inflation. That's inflation. Right? And if you can't see that for what it is, then that's a you problem. If the Federal Reserve chairman is telling you that they're printing money, they're telling you this. They don't even hide it anymore. They're telling you to your face that they print money. If you can't see that, then I don't know what to tell you. If you can't see that if you're borrowing money from a private institution, they create your currency. And if they charge you interest on said currency, you can never pay them back. If you can't see that simple concept, then, this is why most people are dumb. And then you start looking at literacy rates in our country. Like and then now again, like I said before, I don't want to sound like an elitist, but you start to realize like a lot of people are dumb. So why am I saying this? Because when a person like Boyce comes around, he fills that void for dumb people. So you have to understand, you have a lot of people who are functionally illiterate. They don't read on a high level. They can't write on a high level. They lack comprehension. So they just want to be entertained all day. And people like Boyce and Tariq, they fill that void of entertainment. The Breakfast Club fills that void of entertainment. Because see, it's hard to sit here and, look at these type of charts and try to figure out, what does this mean? What opportunities do I have? It's hard to do this, right? It's hard to sit up here and, read a book and then apply what you've read in the book. It's hard to do that. It's easy to watch, this one beef with that one, this one talk about, who's dating who, right? Follow celebrity gossip. That's easy to do. It's hard to deal with the facts of most of the things in your life is a lie. Right? It's hard to do that. It's hard to come to grips with reality of, we're going into a depression. See, it's easy to cope with entertainment, cope with drugs. It's hard to turn to what are the solutions, right? That's hard. It's hard to it's hard to go to that. Now, on the flip side, I understand why people charge and sell courses, because if a person doesn't feel like they've given something, they don't take the course serious. And see, this is something I've learned. If you give away stuff for free, people just don't respect it. Right? But if you charge them for it and they gave their money up, they're going to want to get their money's worth. See, I used to really think that giving away stuff for free would work, but it really doesn't. So I understand why they charge for information. The problem is that the information that they're charging you for is it really that informative, right? Like, if I'm gonna pay $1,000 for a course, it needs to fulfill a need that I have. I don't want to pay $1,000 for a course on information that I can go and Google, right? If I'm paying you $1,000 for some stock market terms that I can go get on Investopedia, that's robbery. And thank you for the donation, Jay Oliver. Appreciate it. And thank you, A2Z. That's exactly what I was saying. The courses are recycled interviews he already has on YouTube. No terms, definitions, no course structure, just lectures and interviews. But that goes back to, like I said before, because a lot of us grew up in a church, we have this way where we like to listen to people just talk, and that's just the reality. And listen, I'm not knocking it. I'm a capitalist, so I get it. If that's how he makes his money, I cannot knock a man on how he makes his money, and I cannot tell you how you should spend your money. What I can just simply do is tell you that there's better ways to spend your money. What I can do is tell you that I can't tell you what to do with your money or how to do it. I can just let you know that there's alternatives. My job is to let you know that there's an alternative. That's my job. Right? But if you still want to go that route after you have been informed, then listen, more power to you. There's nothing wrong with doing a how-to. I never said there's anything. There's nothing wrong with doing a how-to, and there's nothing wrong with charging for information. There's something wrong with when you're charging people for information that they can find. I'm talking about this is readily available information that you can find for free. Like, what is a stock? What is earnings per share? You can Google that. I'm not paying you $3,500 for you to do that. Like, if I have to pay you $3,500 so that you can give me some basic generic definitions, there's something wrong with that, right? But again, it's a free market. You can charge what you want. My job is to let you know you can find better. That's my job. But again, listen, some people like to do stupid things, and there's nothing wrong with that. Big King, that's interesting you said that. Boyce was comparing today to the 1960s and how we haven't progressed yet. At what financial figure, 25K, 50K, 100K, should one start investing in precious metals and real estate, inspired by investing while poor? If you go back to the T-Pain video I did, and thank you for the donation, right? I explained to you that building wealth is something that is done over time. So it's not really a dollar amount that you should be focusing on, in my opinion, right? It's more of is investing going to be a lifestyle for you? So let's say you only have $5,000 right now, because you always hear me say to you, $5,000 isn't a lot of money. But you know that over the next 2, 3, 4, 5 years, you're going to keep building assets and building wealth. Well, then, you can start with 5,000. You can start with 25,000, because you know that you're going to keep allocating over time. Remember, when I talk about gold and silver, I'm talking about a 3 to 5 year window. If right now I only have $25,000, I'm not buying gold, because that's really no wealth to preserve, right? I want to buy things like, remember, this isn't financial advice. It's just me speaking. I want to buy things that's actually going to appreciate and make a lot of money, where I can 2, 3, 4x my money. So if I have 25K, if I have 50K, the best place I'm putting my money right now is in crypto, because it's undervalued. And I know for a fact, if the market performs well and we get back to all-time highs, well, in Bitcoin, I'm 2x in my money. In Ethereum, if Ethereum gets back to all-time highs, I'm 5x in my money. So if I can take 25,000 and make 5 times on that money and make over 100 grand, I'm doing that, right? That to me, that's a better investment opportunity. If I can make $150, $200,000 on a $25,000 investment, that's what I'm looking to do. And then as I make money, I allocate money towards real estate. I allocate money towards precious metals. But when you look at the real estate market right now, like I was saying to you before, like with what's happening in this economy, do you really want to be depending on tenants to pay rent? Right? Like do you really want to depend on that? So me personally, I'm comfortable with what I have. I don't think I'm going to add any more real estate to my portfolio. I don't want to be dealing with that headache of having to try to evict tenants. The courts is going to be extremely backed up. The economy is going to be in a tailspin. People are not going to be able to pay you. I don't know if I really want to be in that situation right now, right? So me, I don't really want to deal with that. Now, some people won't care. They don't care about dealing with tenants. They can get a property manager. That's cool too. But back to your question, like I was saying before, you can start with 5,000, but you have to really start focusing on what are you trying to invest in and what are you trying to accomplish. If I only got $5,000, $10,000, like I said before, the only thing I can think of that I can put my money into and really make some serious money is crypto. There's nowhere else I can see right now unless you're going to play in penny stocks, and that's a gamble. Right? So me personally, I really honestly believe though, the best dollar amount to really start with is like $25K, $50K. But before you start, you need to get financial advice. You need to get financial literacy. You need to have an idea of what you're putting your money into. You need education. So that's why I think most people fail, because they don't put that 10,000 hours in. Right? They don't put the 10,000 hours into really developing the skill set and the knowledge base. Remember, like I know this stuff now because I put the time in. If you would have came and spoken to me 6-7 years ago, I wasn't as knowledgeable as I am today. I took time out and I read books, right? I read Robert Kiyosaki's Rich Dad, Poor Dad, Cash Flow Quadrants, Mike Maloney, Investing in Gold and Silver. I read all of Nassim Taleb's books, The Black Swan, Anti-Fragile. Like I went through that phase of reading books, but also applying information. I went to REI meetups, real estate investment meetups and stuff like that. I went to seminars. I've networked. Like I put the time in. So more important than a dollar amount, you really need to focus on putting the time in. I traded Forex, didn't like it, hated it. I traded binary options, blew a few accounts, lost money. I traded stocks, made some money, lost some money. Like I put the actual time into learning, experiencing different things, and then figuring out what works for me. So the best advice I can give you is start with what you have. If all you have is 5,000, 10,000, start somewhere, but start with education. Start with learning. But again, not financial advice. You need to be getting into crypto. Cryptocurrency right now is going to give you the best risk to reward opportunity that you ever going to get in your lifetime. And I'm just being honest with you. Whether you're looking for a job, whether you're looking to start a business, cryptocurrency is the future right now. You have an opportunity to participate in the blockchain before everyone else is participating in blockchain technology. You are looking at the internet before the internet became popular. So if I had 25,000, if I had 5,000, I'm looking at Ethereum, hell, even Ripple, and I think Ripple's garbage. If Bitcoin pumps, all of these other cryptocurrencies are going to pump. So right now, if I'm sitting here and I'm sitting on $5,000, $10,000, me personally, I'm looking at Ethereum. I'm looking at Tezos. I'm looking at Ethereum. Ripple, Tron, Monero, Cardano. You can get Cardano for 3 cents. You can get Tron for 1 cent. I'm looking at these coins. That's me. That's where I would be putting my money at, right? Risk and reward. So I hope that answers your question for you. But again, as I said in the T-Pain video, if the markets was healthy and we weren't going into this depression, I would say every 3.5 years, look to acquire cash flowing real estate. Every month you should be allocating money towards some type of risk-based asset, whether it's stocks, whether it's crypto, and accumulating wealth over time is what I would tell you. But we're in a different time right now. You're going to experience a lot of volatility. Trust me when I tell you, you haven't seen nothing yet. There's going to be a lot of volatility. There's going to be days the stock market's up 5%, and there's going to be days the market's down 5%. Same thing with crypto. Ethereum was up 18% the other day. And then you could come in here and it could be down 7%. Volatility is going to be the new norm. It's going to be the new norm. And that's just the reality. But the best way, like I said, find a good mentor or a good person you can trust and put the time into whatever it is that you want to get into. If it's real estate, then do that. If it's stocks, then do that. I told you guys, I learned how to trade stocks through S&B Capital. It's expensive as hell, but they know what they're talking about, right? And notice that I want to say something too, and I know I'm going to get called a coon or an Uncle Tom for this, but I want to show you something because I think it's important that you understand how to really vet a person that you're learning from. When you come over here to their website, right, like it's all about trading, and they give you free 2-hour trainings here, right? Like free 2-hour trainings. And if you go to their YouTube channel, like I'll show you this right now. Like it's important that you do this type of stuff, like you vet like who you're going to learn from, because if you go over here to their YouTube channel, this shows me consistency. This shows me something that I can trust, right? This shows me consistency. When I come to their channel, right? Go back real quick for a second. They have 1,177 videos, right? 1,177 videos, all about trading. So that tells me that these people, they specialize in what they do, right? They're not over here. They're not talking about health and fitness today, crypto tomorrow, stock market today, Dr. Sebi, Nipsey Hussle. If you want to learn about stocks, they're all about stocks or trading financial assets, right? And you go to videos. They have over, like I said, over 1,100 videos. And they give away information, valuable information for free. See, you can tell how good a course would be based upon how good their free stuff is. Now look, it says how to trade IPOs. Prepare for the Lyft IPO on Friday. And you can go and watch this video. I'm not going to play it because I don't want to get a copyright. And they're walking you through how they game plan to trade Lyft for free. Becoming a confident trader. Become a pattern recognition machine. How to catch a falling knife. And you can go there and you're going to learn from people who are pros who've been doing this one thing they've been doing for 15 years. This one thing they've been doing for 20 years. They're not just riding a wave. So like when I went to go learn, I learned from people who like Mike Bellafiore and Steve Spencer. They've been doing this for 20 years. They got 20 years in the game of trading. Right? That's the kind of people I want to learn from. So now if I go over here and I learn this stuff for free, I'm damn sure if it's quality free stuff, I'm damn sure going to pay you $3,000 for the quality stuff. Because if it's quality for free, I know what I'm paying for is going to be 10 times better. So I try to emphasize that to you all the time. Like you really got to really vet who you're learning from and what they're trying to give you. Because, you know, if a person's just a wave rider, like I'm in crypto. I show you that I'm in gold, silver, and crypto. And I day trade futures. So you're not going to see me on here trying to really teach you about real estate, and like that's not my wheelhouse. I'm not going to talk to you about options because that's not my wheelhouse. I may can give you some insight. I'm telling you, I'm looking at crypto because I understand supply and demand and I understand market caps. The Fed just printed another $2.3 trillion. You telling me Bitcoin can't get at least 1 trillion? One country just printed $2.3 trillion, not printed, quote unquote, guaranteed, facilitated liquidity. It's all printing money. They just announced 6.2 last week. This is one country. This is a global asset. You telling me Bitcoin can't get 1 trillion? Come on. You telling me Ethereum can't get to $500 billion? It's common sense, right? I pride myself in common sense. Like I said before, I show you where my money's at. I show you what I put my money into. I tell you guys about dollar cost averaging. I don't hide anything from you. And I don't do a bait and switch. I show you who I learned from. I learned how to trade from them. Because see, once you learn how to trade, now it's just about finding which market you like. Some people prefer stocks. Some people prefer options. Some people prefer, Forex. You just have to find a market. But once you understand the psychology, because a lot of trading is just psychology. That's all it is. Like I learn from experts. I don't want to learn from amateurs. I learned from to be honest with you, there's not a lot of information on Bitcoin, like good information. There just isn't, which is why I want to create a course. A lot of Bitcoin I learned just from reading the Bitcoin Talk forum. Like I'm an OG in crypto. Most of the stuff I've learned was just from reading forums and trying it. Like I learned a lot from just trying. I'm a trial and error guy. Like once you tell me something, I believe in going out and breaking things. Like I don't believe in like sitting around and waiting for it to be perfect and waiting till I understand everything. I'm a type of person, I just jump right in, right? Like once I get an idea, I just jump right in. I'll paste it in the chat, S&B Capital right here. I'll put it in the chat. You know, me, I'm not one of those people. I don't like have to wait for confirmation and all that. Like I see something I like, I'm jumping in. If it makes sense to me, I'll figure it out later. Right? That's just me. I've always been that type of person. Like, when I got into Teespring, I didn't know nothing about, pay-per-click marketing, PPC marketing. I said, I'll figure it out. My first 2 ads I put in there, I spent like $2,000 on the ads. I didn't know that like you had to really, target the correct audience and all. I didn't know none of that, but I figured it out. Like I was just like that. Because in my mind, see, let me tell you how gangsta I am. I am the king of I'll spend something on my credit card and I'll call my credit card company and say, I didn't do that. That was fraud. And I'll get my money back. So like, I remember I used to do that on Facebook all the time. Like I'll try out an ad, like advertising, and Facebook will bill my credit card like $500 on ads. And if I didn't make any money, I'll call my credit card company and be like, I didn't make that purchase and get my money back. I used to do it all the time. I used to do that all the time. Like I'll buy something. If I don't like it, I'll call my credit card and get my money back. So listen, that's that's why I'm fearless about trying stuff. Because if I buy something from you and I don't like it, I'm gonna get my money back. So I'm just giving you some information right now. You understand? So listen, I'll try. You give me an idea, I'll use my credit card. All right, cool. I'll use my credit card. I'll try to run some ads. If I don't make any money on that Teespring ad that I'm running, best believe I'm calling my credit card and getting my money back. So listen, I do it all the time. I'm gonna get my money back. I tell people all the time, I'm gonna get my money back. You're not gonna hustle me. You're not gonna have me buy something that's a scam. I know how to get my money back. Trust me when I tell you, I'm always gonna get my money back. But I started with Teespring. I was doing Teespring before anyone knew about Teespring. I know, but it's funny, Mad Dog Barnes. Trust me, I have so much more. Like, I'm talking about ways you can really use the system, man. But people just, A lot of it's obvious stuff, but people just don't really take the time to just look at stuff and just see what's like right in your face. Listen, if you go look at the comments on my video, Octane 10820, man, listen, they're going in on me on the comment section on my last video. they are going in on me on that last live stream. They're calling me all type of coons. I don't know what I'm talking about. I got the white man's D in my mouth. Yeah, the money printer's definitely going brr. Let's see what else is in here. What's in here? I like what you said, Derek Snurl. It's amazing how many people will spend hours agonizing over a new car, a laptop, or a cell phone, but often do zero research before investing thousands of dollars based on a tip from a so-called guru. Exactly. I agree with you 100%. I told you. You know how when I got involved in Bitcoin, there weren't really any exchanges like that. Everything you had to learn was through the Bitcoin Talk forum. I just learned through trial and error, and I got burned a few times with the whole Mt. Gox thing. I should be a super multimillionaire. I lost a lot of Bitcoin, but I learned, you learn things through trial and error. I was young. I didn't know any better, but, I sat there. I used to just read the forum. There wasn't really no like crypto Twitter. There wasn't a crypto YouTube. Like literally like you was just reading a forum and you had to hope and pray that what you was reading was accurate. And I just sit there and read, and then I would try something. And then eventually I figured it out. But like I said, I realized that there's just not a lot of information on. When I say information, I mean like information that the average person can understand about crypto. Because you're dealing with cryptography and computer science. So it's not something that's like when you start getting into the low level stuff, like high level, you can understand what Bitcoin is. But once you get to that low level and you start looking at how the block rewards are created and you start looking at how the difficulty level adjustment, it changes based upon the hashing, you start to see like this is an entire ecosystem. When you start looking at Bitcoin, an entire economy, it's not something as simple as like, just an online currency. Like you can tell the person Satoshi or the group, whoever was behind the pseudonym, like they put a lot of thought into what they were trying to create. And in order to understand crypto, you have to first start with Bitcoin because it's the OG. You have to. I wouldn't touch oil stock. I wouldn't touch oil right now because it's too volatile. When you're dealing with the Saudis, you're dealing with Russia, you're dealing with oil production, you're dealing with a demand issue. It's a lot of volatility in that. Now, trading it, you can make some money if you want to trade it, but like investing, I wouldn't touch that right now. I wouldn't touch it right. I wouldn't touch that right now. Like right now, if I'm an investor and I'm looking at my pension, my 401k, I'm keeping it simple. Apple, Microsoft, Netflix, Google, Amazon. I'm keeping it simple. Right? Like I'm keeping it really, really simple. What stocks right now that are down 20, 30%, that's going to be around 5 years from now? Apple's going to be around 5 years from now. Google's going to be around 5 years from now. Netflix, Amazon, that's what I want to be in. I don't want to be in nothing like as far as if I have money in my retirement account and I'm looking for something safe and stable, that's what I'm looking to put my money into. Keep it simple. Monero's good, Big King, but you got to understand the problem with Monero, and I want to be honest with you, because I'm a huge fan of Monero. I believe that Monero is what Bitcoin should have been. Monero may face a lot of regulatory problems because of the privacy feature that they offer. Because Monero's the really only legit privacy coin that actually can make your transactions private. So you may get to a point where Binance may like certain exchanges may completely blacklisted completely. Like states may make it illegal for any exchange to list it. So that's the kind of risk that you run with Monero. But listen, I like Monero. I like Monero at all. I love Monero. This is one of my favorite cryptocurrencies for obvious reasons. AMC, I heard about that. I'm probably going to do a live stream on that tomorrow, Lou H, about AMC movie theaters going down. Um, let's see what's going on here. I'm in the Nation of Islam, and RZA was out of line for what he posts. That was out of protocol, but he's a good guy. Tariq, Boyce, and Polite are not pro-black. I was raised in the Nation of Islam. I was named after the Honorable Elijah Muhammad. You know, I think what we got at it, like I was like 9, 10, 11 when we left the nation. The Nation of Islam has done some really, really good things as far as rehabilitating the image and the mind of the black man and stuff like that. But at a certain point, there has to be accountability, right? And you have to start looking at what's next. Like, okay, like you took the needle out of the dope fiend's arm. You took the crack pipe out of this person's mouth. You got this person off drugs. You rehabilitated them. But what's next now? And what I've noticed about a lot of people is they stay stuck in that paradigm. Like there's no real growth outside of that surface level about racism. I think a lot of these groups, they just get stuck there and they don't really offer you nothing else outside of the whole racism thing. And I think, like I said before, I don't know if RZA Islam is good or is bad, but I know that from listening to his rhetoric, he's one-dimensional, and everything in his world is just conspiracy. And when you ask a very simple question, like, okay, let's say that the 5G theory is real, what are you going to do about it? See, when you go from, all right, I'm tired of listening to lectures. I don't want you to keep telling me about my problems. The next step now is, what are we going to do about these problems, right? That's how I'm an action-based person. If you tell me that someone's trying to kill me, then the next step is, okay, I need to get them, right? Like, there's no in between with me. If you convince me that something is going to cook me with radiation, then the next step is, okay, we got to go take this down. Because basically I can't live. You're telling me I'm going to die. So like I said, when you start listening to these people, I'm not saying they're good or bad. I'm just saying that it's like, you just get to the point where it's like, there's no real solutions to any of the things that they're saying. They're just talking to you about the problem. And I don't have time to sit up here all day long and talk about problems. I have bills, I have life, I have things I have to do. I cannot just sit up here all day long and listen to you tell me about my problems all day long. Right? Like, like, I need to get to the point of what we gonna do. All right, we gonna buy some land, we gonna get some guns, we gonna get some crypto. What we doing? Because if all we doing is sitting around talking all day, I'm not with that. 100%. Reggie Bates. Tezos is a much better opportunity than Ripple. Like, listen, and a lot of you keep asking me about Ripple. I'm not, listen, I would have to do a whole video on exactly what's wrong with Ripple. There's so much wrong with Ripple, but that doesn't mean you can't make money with it. And that's what I keep trying to tell a lot of you, right? Like, if Bitcoin pumps, all of these coins are going to pump as well. And that's just based upon the function of a market cap and people looking for alternatives and people speculating. But if you're really looking for a project that's developing something that people are going to build on, it has to be Tezos and it has to be Ethereum. If you believe in protocols, if you believe in this is the internet 2.0, 3.0, then you have to be looking at ETH, looking at Tezos. You just have to. Like me, Tron, I don't trust Justin Sun, so I'm not with Tron. So I'm a huge bull on Tezos. Tezos is one of my biggest positions, Reggie Bates. I have a lot of money in Tezos. What else let's see what else is here. See what else is in the chat. Kylo 24, I agree with you 100%. Artificial intelligence companies will have real growth. Of course, biotech, nanotechnology. That's why I like Regeneron 100%. Machine learning, artificial intelligence is the wave. That's the future wave 100%. I agree. I lost a lot of money in Neo. I'm not a fan of Neo. Neo is manipulated and pumped by a lot of Asian countries. I would be very careful with Neo. Thank you, Darnell Edmond, for the donation. I would be very careful with Neo. I lost a big amount of money in Neo, and they're not really updating and developing on that project the way I would want to see it on that protocol. If you go to their GitHub, it's just not. I'm not seeing enough commits on the GitHub for me personally. That's just me. I don't like the project. I'm with Ethereum and Tezos. To me right now are superior protocols as far as actual development. And then there's Cardano. I sold a good amount of Cardano. I brought it back, then I sold it again. I'm iffy on Cardano. I don't really know what Charles is doing. Like I'm like I'll probably like yeah. I probably got like 20% faith in the Cardano at this point. They just keep delaying their release, the update. It's always a bunch of promises. Because Charles, he helped build Ethereum and create Ethereum with Vitalik, but I don't really know what's up with Cardano. But like I said, Tezos and Ethereum is where my money's at. What do you think about a software developer talking about vaccines? I don't really understand that question. Can you go a little bit more into detail? No, I don't think until a government adopting cryptocurrency is going to make crypto pump. I don't believe that. I don't believe that at all. No, Rocky Moore, I'm not looking at any um I'm not looking at any of these new cryptocurrency projects. I believe that we're out of that whole ICO phase. Um I believe that we're out of the whole hype with a white paper. This coin is faster than Bitcoin. This coin can do more transactions and all that. I believe that we're at a phase now where a lot of, like, for example, like Ethereum with the whole DeFi and trying to decentralize finance, like most of the good projects already exist at this point. And now it's just a matter of building dApps and tokens on top of many of these different crypto protocols. I believe that's where we at now. Like the market's beginning to mature. So like the cream is has basically risen to the top, and this may be like your last chance with the halving coming up. Where's the clock at? Right now, this is your best time to buy. Like you're not going to get another opportunity like this, in my personal opinion. As far as like these next 33 days, you may see another shakeout because they always want to shake out the weak hands. But once we have the halving come, I believe Bitcoin's going to pump, Ethereum's going to pump, and the rest of the crypto projects, the good crypto projects, are going to pump as well. Like VeChain's a good project. I could tell you some projects, some of the coins I own. Atom is really good. You have Maker, you have Ontology, Basic Attention Token, you have VChain. Qtum is good. Lost money into Cred. Every time I see Decred, I get upset. Where's the 0x? This right here is also another crypto project you guys should be looking at. Augur is good. Really look at 0x. Take a look at Augur. Take a look at Waves. What else do I have in here in the top 50? I got burned in Nano before too. I got Engine Coin. A lot of the Engine Coin I got, this was airdropped to me from EOS. I was holding EOS. I got an airdrop for some of those coins. So in Aeon, I really like Aeon. Those are some good coins that you should go and look at. If you're new and you're just starting, use Binance or use Coinbase. It's very easy. I have a video on my YouTube channel. I'll walk you through how to let's go to my channel. I'll show you. I'll show you how to buy crypto on Coinbase. How to buy Bitcoin. Where's the video at? Here we go, right here. Copy link address. I'm not into IOTA. Why can't I paste this? Why won't it let me paste? Paste. So I walk you through how to buy Bitcoin. I planned on doing another video, but with this whole pandemic thing, I can't actually get a haircut. So I can't even make any videos and show my face because I can't get a haircut. Dogecoin's not trash, but it's pointless. Like, it's just no reason. There's better things to put your money in. Facebook, the whole Libra thing, they were trying to make a stable coin. That was the whole point, and they shut that down. Think about it. Based upon the way that these social media companies operate between YouTube and, Facebook, with all the censorship, would you really want them in control of your money? Like, with all this hate speech and what you can and can't say on YouTube and demonetizing you, what do you think they're going to do if they create a currency where they can control it? And a good show to watch is Mr. Robot. They talk about, Evil Corp and stuff like that. They're basically referring to Facebook. No, Coinbase only allows, I believe, Litecoin, Bitcoin Cash, Bitcoin, Ethereum Classic, and Ethereum. Lou H, laugh out loud. I was going to give myself a fade yesterday, but came to my senses. Yeah, I tried to cut my hair. It came out horrible. If you see the way my hair look, you'll laugh at me. I look like a fool. But we're coming up on an hour, almost 2 hours, I mean. So I'm going to end the stream here, guys. Thank you for tuning in. Thank you to everyone who donated. Please like, share, subscribe, hit the notification bell, and join my mailing list. And we'll be live tomorrow. We'll probably talk about what's happening with the movie theaters. So I'll see you guys tomorrow.